My share portfolio has just hit $40,000. Now I said $40,000 because it's true. I didn't put $1 million in the thumbnail to try and entice you to click on this video. And what's interesting is when I started this journey, I had no financial training whatsoever. I share my story because you can do it too. You don't have to be a financial genius. You don't even have to be highly intelligent. I'm just a regular guy. And what I boil it down to are these three things which I'm going to share with you if you want to start to go on that journey yourself. And the first thing you have to do is change your mindset, or try and look forward into the future and decide what kind of life that you would like. Now, if you look into the future and you're happy with the path that you're on, you have a job that you absolutely love, maybe it pays you enough, but you're feeling fulfilled in life, that is absolutely fine. No judgment in that whatsoever. However, if you're in a job that perhaps you don't love so much, or maybe it's just okay, and you want something more for yourself, or perhaps you want to be able to take your family on a holiday, or have different financial freedoms to do the things that you're passionate about, then you have to change the way that you think. You have to change your mindset. So back when I first started investing, I very much just had regular mindset. I would get my pay, maybe put a little bit of savings away, and then spend the rest. You know, fun things like clothes, going out, having a good time, going out with friends, using my money as a tool to have fun. So I was effectively working for my money. I would have to attend my job, I would have to work my hours, and I was putting in that effort to work for the money that I received. Like everyone, you put a bit of savings away for a holiday, things like that, you spend it, and then you start back at square one. And I remember thinking to myself, if I really wanted to get ahead, if I really wanted to have more money, I would either have to work harder, I would either have to try and continue to go for promotions, or work second and third jobs. That was the mindset that I had if I wanted to increase the financial or improve the financial position that I was in at the time. And for some people, that's not always achievable. If you already have a mortgage, or if you already have financial responsibilities or family responsibilities, you can't just switch jobs at the drop of a hat. Sometimes there's no promotions available in the jobs that you have. You're putting your success and your progression in the hands of someone else. And I remember just feeling really helpless. And I thought, okay, there must be another way. So I would say 1A is education. I started educating myself around financial concepts, around investing, and started reading as many books as I can to start to learn that skill. And what was obvious is that no one has ever saved themselves rich. Think about the people you know. Think about your friends and family. How many people you know that just save for their whole life are actually financially free, are actually wealthy? And my guess is there's not many people, because you only get really a small percentage on in savings accounts, and that's purely just to try and keep up with inflation. So in that process of educating, I switched my mindset from me going and working for my money to how could my money work for me? And that's a bit of a cliche, but it's very true. You need to have your money working for you. I like to think of my money as little soldiers that I send out in the world to do my bidding, to work for me now. And if you talk to people about investing, your friends and family, they'll say, it's too risky. I don't want to lose my money. And for me, what's even more risky, the opportunity cost of going your whole life just waiting for your boss to promote you. To me, that risk seemed to be far worse than sending my money out into the world working for me. And in that process of education, in that process of the mindset shift, I learned that the Australian stock market long-term annualized return is between 8 and 13%. That is the average return of the Australian stock market. Some years lower, some years higher, but the average is somewhere in that range. And so I started viewing money very differently. When I would go out and say I was going to have a large expenditure on an item, I would compare that to the opportunity cost of investing that money. So I was going to go out and buy a new iPad, for example, $1,000. I would think to myself, well, I could invest that $1,000 in the stock market, make 8% on that, and compound that each year. So why I'm saying this is you don't necessarily need to be stingy. You still need to enjoy life. But the first part of it is definitely changing your mindset, having your money work for you, and then viewing financial decisions on what you are losing out on investment returns. That was the first part of my journey. Now, the second part, after you've achieved that mindset shift, is actually putting money aside each pay to invest. So there's lots of financial commentators that talk about savings. I think that's really important as well. You should have an emergency fund, but allocating a portion of your pay each time you get paid to invest in the stock market. And when you build up enough of a little pot, investing that sum in the stock market. Now, investing is actually really easy these days. When I first started, it was much difficult. You could only really do it via the big banks or big trading platforms. Nowadays, there are so many brokers, so many smaller tech brokers, that all you need is an app on your phone and as little as $100 to start trading. So it's much, much easier to start nowadays. So the second part is making investing a habit, doing it each and every time that you get paid. Now, there's a famous statistic where 80 to 90% of professional investors are unable to beat the S&P 500 index, which is the average return from the US stock market. So what that means is professional investors that do it full time over a long period of time are unable to beat the general return of the stock market as a whole. So if the professionals are unable to beat the stock market, why even try to time the market? There's a famous saying, time in the market beats time in the market. And especially if you're not a professional investor, why not just buy the market as a whole? And there are different instruments you can do that called ETFs, which are exchange traded funds. Now, one method that can assist with you taking the emotion out of investing and not trying to time the market is called dollar cost averaging. And that's simply the method I'm discussing in this video, putting money aside each pay, buying shares periodically. Sometimes you'll buy when the share price is really high. Sometimes you'll buy when it's really low. When it's low, you end up buying more shares because the price is lower than when it's high. And over the long run, you get about an average price. So for beginner investors, for regular investors, dollar cost averaging is a really good way for you to be able to take the emotions out of investing and continue to make investing a habit. And then you've got to let the compounding machine do its trick. Once you receive dividends from your shares, keep reinvesting those dividends into the stocks. And what started off as a really, really small share portfolio will start to grow bigger and bigger and bigger, and it'll eventually go exponential. It's like a snowball rolling down a hill, getting bigger and bigger and bigger with each piece of snow that it collects. So part 2 of the journey is make investing part of your habit. And I would say part 3, the final part of the journey for me so far, is perseverance. At the start, it's going to be really, really disheartening. The dividends that you're going to receive are going to be tiny. They might be 20 cents. They could be $6. And you'll think to myself, why would I even bother with this stuff? And you just give up. It's really, really important when you're small, when you're starting out, to push through those difficult times, to persevere on the journey. Because eventually, so when I started, my dividends were tiny. Couldn't do anything. You buy a pack of chewing gum with the dividends that you receive. But now, where I'm at now, the annual dividend I receive is around $600 a year. Again, doesn't make me rich, but that's certainly something to think about. I'm looking forward to my next step when my annual dividend will be $1,000. So you've really, really got to persevere through those early stages where you feel like you're not making any traction, where you feel like you're not getting anywhere. The dividends you're receiving are small. You may have even made some poor choices with your investments. You've got to persevere through those times. And as your pot gets bigger and bigger and bigger, then it becomes a little bit easier and easier and easier each time. And the goal for beginner investors should try to get to a share portfolio of $100,000. I'll put a graph up on the screen. The first 100,000 is the most difficult. Once you get that, the exponential goes up really, really quickly. So for me, hitting $40,000, I'm really excited about that. That's a little mini milestone for me. I'm going to continue on my journey. I'd like as many people as can to come on that journey with me, the journey to financial freedom, the journey to having choice with what you do with your life, with what you do with your time, the journey of being able to take your family on a nice holiday, the journey about being able to take yourself on a nice holiday and not put yourself into debt in doing so. Thanks for tuning in. My name's Tomo. Head over to my YouTube channel and check out some more videos I've done where I talk about investing, I talk about taxes, everything about saving money to be able to put into my share portfolio. Take care.